Happy Friday. Fed week has come and it has gone, and the Fed left rates unchanged. And the comments really is what drove the market reaction this week. So, more on that to come. But as we kick off this glorious Friday, the 30-year fix sits at 6.71, which is down from last week's 6.82. Something I've been wanting to say for some time, and I know the market has too. So, this week we're going to dive into all things Fed, what it means for you, buyers and sellers alike. And lastly, want to close it out with some useful tips on condos, as we've been getting a ton of questions around, hey, what's going on with condos? So let's dive into it. Fed week, as we know, the market's been very cued in and very intrigued to what the Fed is going to do, but most importantly, what are they going to say, and how is that going to be received by the market? So as we know, as we expected, Federal Open Market Committee, the FOMC, left rates unchanged this week. No surprise there. There was no expectations of a hike or a cut. It was expected rates were going to be left alone. Another pause. What the market was really looking towards was around balance sheet runoff, quantitative tightening, the dot plot, so where voting members see the Fed funds rate short and long term, and ultimately the comments. So let's dive into that. As we know, again, Fed left rates unchanged, but it was the dots and Jerome Powell's comments that really sparked some much needed relief in the market. So this kind of wait and see approach. So Jerome Powell took the podium, answered a ton of questions, addressed, kind of the elephant in the room around tariffs and what that means for the market going forward, where the committee is still committed to their 2% target in inflation and maximum employment, which is why we did not see a cut this go around. But he did absolutely acknowledge that, yes, tariffs are going to potentially put pressure on inflation. Now, it's a one-time occurrence as opposed to a rising, so something they are absolutely cued in on and expect some economic shift from. Additionally, on balance sheet runoff, as we know, the Treasury or the Federal Reserve holds a tremendous amount of assets, specifically around treasuries, bonds, so on and so forth. And as those mature, or as those notes mature, they were just running off, meaning they were gone. What the Fed is now going to do is essentially start repurchasing some of that runoff. And it's going to open specifically to treasuries, but potentially to bonds, which ultimately is quantitative easing, which is where we saw in cycles past rates really decline. So the market really picked up on that. The other big thing was the dots. And as we know, the dots is all voting members of the Fed, essentially unanimously telegraphing where they see the Fed funds rate going forward. And now for the duration of 2025, 2 rate cuts are expected. Now that obviously can change, as Jerome Powell said, if we start to see more economic weakness, specifically in labor. So ultimately, bonds liked it. We saw a pretty sharp rally on Fed Day. Treasuries, the 10-year specifically, as well as the 2-year, fell to some of their multi-week lows, which is why we're, showing rates where they are today. So market is obviously still in this wait and see approach of, hey, when will they actually start cutting? But for now, it did not hurt us, and it's something we're going to run with. So that brings us to condos. As we know, condos have been a challenge. And there was an article published, realtor.com, speaking to kind of the quote unquote blacklist, which is ultimately the Fannie or Freddie ineligible list, which eliminates the opportunity for that complex or potential homeowner to receive or seek traditional conventional financing. This could be anything from deferred maintenance, insurance inaccuracies, or litigation. 2 big things that we're noticing, though: insurance deficiencies and critical repairs. So what you can do to ensure success for both your buyers and potential sellers: get with your lender before you take on a listing. Verify that the complex is not on that ineligible list. As getting off is an absolute challenge. But also the buyer that you're working with, if you're writing on a condo, have your lender verify that in advance. We're seeing a lot of instances where it comes up too late, the ineligibility status, And really, there's no way to pivot outside going to a non-conventional or non-QM financing route. So really save yourself the heartache. And if you're thinking about, or if you're looking at listing a condo or your buyer's buying a condo, reach out to either us or your trusted lender partner and do the due diligence up front. It'll save you so much unnecessary headache and frustration. With that said, let's make it a fantastic Friday. As always, if you're running into scenarios where you need guidance, support, need to run something by us, we're here, we're around, and would love the opportunity to serve you. As always, let's make it a fantastic Friday and even greater weekend. Thank you.